Well, Armstrong joins us from the Armstrong Advisory Group now. Thanks for coming in. We appreciate your expertise. All right, let's first get your thoughts on the move today. We didn't know if it was going to be a quarter point, a half point. We got the higher end of what it could have been today, the half-point cut. Wall Street liked it. The Dow surged a couple hundred points out of the gate, and then they decided at the end of the day they didn't like it.
They did, yeah. So tough to interpret the day's stock moves on the surface. It could have been the predictions for future cuts coming in maybe where they were expected and just not quite as heavy on the cut space as expected. And there's a couple ways to interpret all this. One would be you don't typically get a 50 basis point cut when everything's going great in the economy. So, oh, is this the sky is falling? But the message they tried to send was, no, it's not that. It's more just that we maybe should have cut back in July had we known the state of the information. And now that we know, we want to make up for lost time.
Okay, well, we like to try to answer viewer questions when we get them. And Judy in Sandwich sent us a question about what this means for the housing market. So specifically, she is selling her home and asks, is this also a good time to drop the asking price of my house? It was listed on August 1st, and I haven't seen many interested buyers.
Yeah, I mean, one, speak to your realtor and speak to the true real estate experts. But, you know, my view would be, hey, if rates are coming down, and they already have, the good news on mortgage rates is that they've already come down from a high last October of around 8% on the 30-year down to low 6s. But to that point, if that hasn't induced the buyers, is there going to be anything new that will? And I don't have an answer there because, you know, mortgage rates today didn't move, and I don't expect they will significantly until we get through the next 6 to 12 months.
So mortgage rates don't track exactly with what the Fed does, but some other interest rates do. Credit cards, auto loans. If you have a HELOC, that tracks a little more closely. And of course, if you also have just money in a savings account, that kind of interest. So I guess that's the next question. What does the future look like? The economy is still pretty strong. The labor market has weakened, which is maybe why we got the half-point cut today. But you don't envision big cuts coming given the strength of the economy overall, especially when it's compared to other economies around the world.
Yeah, certainly. And the U.S. is still in a pretty solid point. And that was the point that Jerome Powell was attempting to make today, is that even at 4.2 or 4.3% unemployment, that's a pretty strong level for this economy. There was one question from the press conference that he didn't seem to have a great answer for, which is, hey, you're predicting that unemployment gets up to 4.5% by the end of this year. Historically, usually once it gets going on that type of pace of increase, it doesn't stop there. And that was the one question that I felt he did not have a great answer to, and gave him some pause to say, yeah, we hope. My main takeaway was we don't really have an answer, and we hope this time's different.
So if the job numbers keep ticking up, though, you wouldn't be surprised to see a bigger rate cut again?
That would be the reason for it, yeah. Should job unemployment rate numbers tick up, should you see layoffs coming, which we have by and large not seen to this point, that would be the reason for rates to come down faster than they already have.
All right, Michael Armstrong, thank you so much for joining us and answering the questions.
Thank you.
Especially of our viewers. Thanks, Judy.